So yesterday we talked about the basics of blockchain, that is definition of blockchain, definition of cryptocurrency, definition of Bitcoin, definition of fiat money, that is our normal money that we use, naira, dollar, and the rest. And also we show the differences between all these examples, that is the difference between cryptocurrency and fiat money, the difference between Bitcoin and cryptocurrency, because each of them is a different entity on its own. Okay, and we clarify everything to the beginners. Okay, we went ahead and show example of transfers using Naira, that is using our local banks, and then using blockchain, how faster and how will I say, and the transaction fee is also lesser. Okay, we show the examples, and then we show the areas of application, that is where blockchain can be used to improve our life. For example, in charity, in remittances, that is in our banking industries. Okay, in lot of them, supply chain, healthcare, Internet of Things, gaming, decentralized finance, decentralized applications. All these are blockchain can assist us in improving our lives. Okay, so today we are going to look at the basics of trading. The basics of trading. Okay, the class will just give us the overview of what trading is and how trading can be used to enter and to exit the market. Okay, so this is not a complete tutorial of trading, because 1 hour or 2 hour lecture will not be enough to sustain everything about trading. Okay, but for the sake of this overview class, it will give you a hint as to how we do the trading. That is, we are not just gambling with our money, but rather we are studying some informations, and then from there we predict how the market will go, whether it will go up, whether it will go down, or whether the market is resting or consolidating. Okay, so I will share my screen with you, and then you can view the presentation as I am explaining to you. So this is the presentation. Okay, welcome to BitCover, Basics of Crypto Trading. I'm the presenter. My name is Mahmoud Sardauna, and I have been with you guys from 2019, 2018, and now it is 2020, and sorry, now it is 2021. Okay, so the topics is basics of crypto trading. Okay, Mahmoud Sardauna, BTech Engineering, FCTA in view, a teacher and a public speaker. For those of you who don't know me, this is my picture. Okay, our personal mission, or my personal mission, is to accelerate Africa's transition into a sustainable and developed economy by leveraging innovation, blah, 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 blah. Okay, so what is expected of you at the end of this class is to understand the concepts, because there is a major difference between university courses and real life skill. In university courses, the main idea is just to get the grade. But here, the main idea is to understand all the concepts. Because when you cheat yourself by skipping some part of the trading aspect or anything, and you just jump into the trading, the market will teach you, but in the hardest way. That is, you lose your money and then you learn again. So try to understand all the concept, and then try to ask yourself, why do I need to start trading? Because people are making millions in writing, in designing, in music, in poetry, and a lot of things. So why do I want to enter trading? Ask yourself this question and then try to answer it. Is it because of the money, the passion, the innovation, the technology? Okay, so once you answer this particular question, then you need to do the work, meaning you have to study, you have to have the knowledge. You can't just jump in and say, today I want to become a doctor. You just get a white lab coat, and then you start with your stethoscope and everything, and then you start diagnosing people and so on and so forth. Okay, so you need to do the work, meaning you need to learn the act, and then you ask questions. because some of the times you get a concept maybe halfway and then you need to fill the other half. So it is only by asking questions. That's why nobody is a professional on his own. No, rather we share ideas here. We interact with one another. We ask questions when something is not clear, when something is ambiguous to us, then we ask questions. And then the last thing is practice. You can never be good at something by just watching others do it. I can remember when I started doing graphics. Okay, so when I go to business center and the guy is doing the design, in my mind I'll be like, this one is simple now, this one is simple, just text tool and everything, and then this and that and that and that and everything. So I just took it like, this one is simple, I don't have to even practice it. Okay, so one day our Oga was not around, so I was asked to do the design. So that design that I thought it was simple, I spent more than 3 hours trying to do that simple design. So the same thing with crypto and everything, or any skill that you see out there. You can't, when someone is explaining or when someone is doing it, you may think that it is easy. But believe me, when you start doing it, you realize that it is way harder than what you are seeing. So you need to practice. Set aside some time, 1 hour, 30 minutes, 2 hours, or 1 hour in a week, or 2 hours in a week. Okay. The idea is all about consistency. Do not start it and then drop it and then say, you're trading in. No. If you want to do something, do it religiously. And wallahi, you'll get the results that you want. Okay. So that being said, the first thing is, what is trading? So we say that trading simply refers to buying and selling of asset. Asset means anything of value. So whenever you buy or whenever you sell something, this act is called trading. Okay, so buying things in the market, in the shops, in the kiosk, and everywhere is called trading. And the same thing, when you exchange one thing for another, that thing also is also trading. Ka je kasuwa ka yi kakara, ka ɗauki sabon wayanka, tsohon wayanka, ka kai an baka sabon waya. It is also a trading. Okay, so all these things are trading. Whenever you give something and you get something in return, it is called trading. Okay, so this trading aspect, okay, is applicable to everything: stock, bonds, options, cryptocurrencies, and so on and so forth. Okay, so all these are terminologies. All these are different types of markets. Just like we have our modern market, we have our local market, we have our international market, we have our trade fairs, we have our, so all of them, they are different markets. But what we do there is just we give value and then we take value. We give something and then we get something in return. So all the activities that are being done in all these stocks, bonds, forex, options, and cryptocurrencies is all buying and selling. Okay, so the next thing to talk about after talking about trading is that we need to note that in cryptocurrency, we trade things in pairs, just like in real life situations. We trade things in pair. Okay, so let's take, for example, I have my Naira and I want to buy Bitcoin. So in cryptocurrency market, these two pairs are joined together and they are being represented as a pair, meaning I can only use Naira to buy Bitcoin, or I can only sell my BTC to get Naira using that particular pair, So all the markets are being grouped into pairs: BTC, Naira, BTC, USDT, BTC, Ethereum, or Ethereum, Naira, Ethereum, dollars. You can't see a single coin like this standing alone. No. Dole a hada shi da dan uwan shi. Kowanne yana da nashi dan uwa. Bitcoin a hada shi da Naira, ko kuma Naira a hada shi da USDT, ko USDT a hada shi da BNB. Dole a hada kowanne da dan uwan shi, saboda a lokacin da kake siyan fiya na daya, kana siyar da wani dan uwan shi. Please, am I sharing my screen? Okay, yeah, I'm sharing my screen, sorry. Okay, So let's say, for example, I enter the market using NGN and I want to get Ethereum. So the pair that I will be looking for is Ethereum NGN. This is the pair that will give me that Ethereum that I want. That is Ethereum and Naira. So I will now sell my Naira, and in return, they will now give me Ethereum. So this is trading, because you sold your Naira and then you got Ethereum. The same thing when I made a lot of profit and then I want to get Naira in return. So I will now come to the same market, that is Ethereum NGN. And then in this case, I will now sell my Ethereum, and in return, I will be paid in Naira. So I will take my Naira and then I will cash it out to my bank account, and then I can do whatever I want to do. Okay, so this is exactly how the crypto market works. Meaning you cannot just see something, just one pair like this, let's say NGN only. No, they have to attach it to another pair, another currency or cryptocurrency. So maybe NGN BTC. Okay, so let's say, for example, like this. I believe you are familiar with Binance application, which is the application that we'll be using throughout. Okay, so if you look at this, for example, like this, if you look at this particular guy here, Reef, we have Reef/BTC. So if you sell your Reef, you will be paid in BTC. This is what it means. And if you have BTC, you can convert your BTC to get Reef. So the same thing, if you go up here, we have BTC, BUSD. So this market, if you have BTC and you sell it, you will get your BUSD. And if you are no longer needing your BUSD, you can now convert it back to BTC. So these are the pairs. So for all the markets, for all the crypto market, everything is being presented in pairs. Okay? So I believe you now understand how it works. Okay? So another thing to talk about in the market is the types of orders. Because when you are about to enter the market or to buy a coin or to sell a coin, we have different types of orders. Just like when you go to a restaurant, we have different types of orders. For example, maybe there are special reservations. There are just normal ones. You can just pick the table, the menu, and then you order, and so on and so forth. And maybe there is home delivery and orders. Okay. So in crypto also, while placing your buy or sell order, we have different types of orders. So the first one is the limit order. Okay. So the limit order allows you to buy or to sell a crypto asset at a specific price, at your own price. Okay. It gives you the ability to sell that asset at your own price. Okay. So once the market hit that particular price, your asset or your coin will be sold. Let me give you an example. Let's say I bought, let's say I bought a coin, or I want to buy a coin, and the market price is 10 Naira at the moment. But I don't want to enter at $10. I think that the value is way above average. So I want to wait till when the price is back to, let's say, $8. Okay. So I will now, okay, sorry. Some participants are waiting. Just give me a second, please. Zoom participant, sorry. Okay, so I will now wait, I will now place a limit order to buy that particular coin at $8. So the market, So the market is now at $10. So I will place the order at $8. And when the market drops down to $8, my order will be filled. And then I will have that coin at that particular price. So instead of you to wait and wait and wait till when the price drops to $8, you can just place a limit order and then go and continue with whatever you are doing. And once the market comes to that particular price, your order will be filled. So the same thing when you want to sell an asset. Let's say the asset, you bought it at $10 and now, after you bought it at $8, maybe you want to sell it at $15, for example. So you can set a limit order to sell the coin when the coin hits $15. So you can be offline, and when the price reaches $15, your order will be executed, and then you'll just get your naira or dollar or whatever value or pair you are trading with. So this is exactly what the limit order is. So instead of you to, it says that limit order, okay? So the limit order just allow you to buy or sell an asset as a specific price or something, or as a price that is better for you, the price that you feel is better for you, okay? So it is not executed promptly until when the market reaches that particular level. So the difference between limit order and the market order is, the market order is an order to buy or sell at the best available market price. That is at the current market price. Let's say the market price of that commodity is 10 naira. So if you set your buy order at 10 naira or $10, it will automatically execute. So for the limit order, the price is at $10, but you want to buy it at $8. So you have to wait. But for this one, it is instant. Okay, so that's the major difference between limit and market order. Limit order, you place the order and you wait till when the market reaches that particular price. Okay, so for the market order, it will execute automatically. The moment you place the order, the market will just find the best price and then it will just buy it for you instantly. Okay, then the next one is the stop loss order. Okay, so a stop loss order is a type of order that you place so that you limit your losses. That is, we call it a stop loss. A stop loss is simply a mechanism that is being used by a trader to limit his own loss. Maimakon yayi asaran 10,000 with stop loss, sai ya fita kasuwan tun yana asaran 2,000. So he will close his position when the price, maybe when his loss is maybe 2,000 or maybe 3,000 naira, and so on and so forth. So it gives you the ability to limit your loss. That is why it is called stop loss. Okay, so there are conditions that has to be fulfilled. Okay, so that's why as traders or as beginners into trading, you need to know that we always make room for loss. Just because you have $10 and you see a trade, that doesn't mean that definitely that trade will be executed. That is, your profit is sure, is guaranteed. You may go into loss because the market is being controlled by different factors, by different people. So that's why you need to provide options for losses. Okay, so let's say, for example, a certain coin at $8, and the price went all the way to like $10, for example, or maybe let's say to like $12. Okay, and now I am afraid because Bitcoin is jumping like a small kid. It is just going up and down, and I don't want to lose all this profit that I made. So I will tell the software that, okay, if this price come down to, let's say, $10, just sell all my coin, sell all coin. Okay, so this is a stop loss order. This one we are just talking in theory. Okay, so maybe we'll do the practical aspect and you guys will see exactly how the orders look like. Okay, so let's say, for example, we just pick any coin. Let's maybe, for example, CRV. Or maybe let's go for USDT PS. So I'll come to market and then I will search any coin. Let's say I will search a Litecoin. So the ticker is LTC, and then I will search for USDT. Okay, look at USDT there. Okay, and then I will change the time frame to like 1 day. Okay, I will click buy, for example. Okay, so if you come over here, you will notice something here. We have the limit market, the limit order, and we have the market order. Let's say this one is 1, this one is 2, and this one is 3. Okay, so all these that you are seeing here, all these that you are seeing here, they are limit orders. And this one that is at the center here, number 2, we call it the market order, because right now this is the market order. It's just like you going to the market, you want to buy a measure of rice. A measure of rice is 700 naira. That is the market price. Let's say, for example, it is fixed. But you know that, normally when a seller brought his good to the market and maybe around the evening he's in a rush to go back home, he will reduce the price maybe to around 650. So you can just say, okay, let me just wait now till evening and then I will buy my rice at that particular price. So with that, you are now in a limit order. Whereas those people that will just come and pay their 700 naira to get their measure, they are buying at the market price, and you are now waiting for a limit order. So for the stop limit, this is the one that we just talk about. Like, okay, if the price of this particular measure has dropped to, let's say, for example, 650 or 640, or sorry, if it goes up, since now we are buying, if it goes beyond 720, maybe there is no rise in the market. So you are afraid that maybe the market may go up to around maybe 750 per measure of rice. So just buy it. So when you are selling, in terms of selling, let's say, for example, you bought it at 650, or maybe you bought it at 700 naira per measure. Okay, so the stop limit, that is how to execute it, is that if the price drops to 650, just sell it at 630 naira. So these are the conditions. If the market drops to 650, just sell my good at this particular price, or just execute this particular order. So this is the limit order. As you can see here, the price of this asset, the market price is $142. That is here. This is the market price. So, but me, I want to buy it at, let's say, 100, and that is a lower price. Let's say 120. So by virtue of this, I am now setting a limit order, meaning if the market comes down to 120, my order will be executed. Then I can enter the amount of this particular coin that I want to buy. And this is the total amount that I will be paying. I will be paying $2,400. And then I can click the buy button. Okay? And the next one is the market order. Once you click the market order, it will just pick this particular price. Whatever price it sees here, it will just automatically buy this particular coin. That's why it is not shown here, the price, because indirectly, this particular price will affect this particular asset that you are just buying. So whatever the price is, it will just pick it, and then it will fill the amount, and then it will execute your order. So the best method of buying is the limit, especially when you are just entering the market, like when you are buying, and there are a lot of opportunities to that, okay? And then the last one is the stop limit, okay? So let's say, for example, we want to buy 10 LTC, and then the price is 141. So let's say, for example, if the price reaches 130, or maybe, okay, so if the price reaches 135, okay, so if the price reaches 135, buy this particular coin at this value of 130. This particular coin at this particular price. So this is the buying price, and this is the stop limit, and then this is the quantity, and then this is the total amount, and then this is the buy button. Okay, so the next thing to talk about after different types of orders is the technical and the fundamental analysis. Since we say that the market is all about analyzing and then getting in, making profit, and so on and so forth. This is basically what trading is all about. Knowing when to enter, how to enter, and when to exit. Okay, so over the time, traders realize that there are some patterns in the market that that it can be followed, and that patterns or those patterns give rise to profit. Okay, so most of the times the traders either follow technical analysis or fundamental analysis. So the fundamental analysis is simply looking at the external factors that can affect a coin's value or a cryptocurrency's value. For example, maybe there are news about Ripple, for example, and look at how it affects Ripple. The price crashed and crashed and crashed. Okay, because of what? Because of fundamental analysis, because of the news, the external force. Look at what happened with one coin called Sushi. One of the developers just cashed out, okay, and left the project, and then people started panicking and they sold their position. Okay, so all these are news that can affect the market. So some people just look at the news or look at the external forces that can affect a coin, and with that, they will analyze whether to enter or not to enter the market. For example, let's say, for example, Trump, that is the president of America, decided to buy, let's say, just one coin, let's say Reef, for example, and then he posted his wallet and maybe he posted it on Twitter. Definitely, Reef will go up, will go to the moon, because Trump is an influencer, and a lot of people will think that this particular coin will have some specific value. So people will keep buying and buying with the hope that this particular coin will give some values. Okay? So the same thing when you talk about Bitcoin, we talk about number of addresses, because these are fundamental analysis. Number of addresses that are holding, let's say, 1 BTC, number of addresses that are holding more than 1,000 BTCs, number of addresses that are holding 0.1 BTCs, number of addresses that are being created, number of addresses, and so on and so forth. Okay, so all these are fundamental analysis. The hash rate, that is those people that are mining, the trading volume. For example, before Bitcoin reaches its all-time high, the volume went all the way to around $700 million. That is beating, is it Facebook or Apple? That is in terms of total value, total market cap. Okay, so all these are fundamental analysis. The news, the company, the profile of the company, the people, that is the management, the leadership, the development, the technology. all these are fundamental analysis. So some people just look at the fundamental analysis. Like for example, since we say that Ethereum is having a good development, that is Vitalik Buterin is trying with Ethereum 2.0 and so on and so forth. Okay, so a lot of people are optimistic that Ethereum may reach 2,000, 20,000, 2,500, 3,000, and so on and so forth. Okay, so all these are fundamental analysis. Okay, and some people look at the charts. That is, they study the previous price movements and the patterns and the trend in the market. So this type of analysis, we call them technical, or this type of analysis is called technical analysis. That is studying the market price, because the human psychology is always functioning the same. That is greed versus fear. When we are making money, greed will overtake us. And when we are losing money, fear will overtake us. So this particular principle was developed from 16th century up till 21st century, and it is still applicable. Okay? So that's why you can see a lot of charts. We are drawing a lot of lines and so on and so forth. Actually, we are not wizards. We are not doing magic. We are not doing anything. We're actually studying the market. And after studying the market, we try to analyze what we see in the market. So this is actually how people enter into a coin. We don't enter into a coin because it is at the front page of Binance. We don't enter a coin because it is having 200, 300 gains. We don't enter a coin because someone told us to enter the coin. No, we study either the external factors of the coin, or we study the internal factors of the coin. That is the fundamental or the technical aspect of that particular project. Okay. So some people usually ask this question: which one is better? Is it the fundamental or is it the technical? Okay. The best answer is that you need to marry the two together. You need to join the two together. Meaning, as you are doing the fundamental analysis, you are also looking at the technical analysis. As you are looking at the technical analysis, you should also look at the fundamental analysis. Let's just give an example with Ripple. Let's say, for example, before that SEC announcement, Ripple is having a kind of a bullish momentum and everything, the setup and everything is in order. And then you suddenly enter the market, and then that SEC information, which is a news and also a fundamental analysis, just springs out, and then the price went down. Okay, so by virtue of you not following the news, your technical analysis become invalid and you end up losing money. Okay, so the best method is that you need to join both the technical and the fundamental analysis. In other words, we call them TA and FA. So anytime you see TA and FA, we are referring to fundamental analysis and then technical analysis. You have to be getting all the terminologies because we'll be using them times and again. Okay, since the news is something that you cannot control because you don't know when the news will just blow. You just wake up in the morning, you open your CNN and you see that Bitcoin has crashed and so on and so forth. People are selling and so on and so forth. Okay, you cannot control the news, but you can control the chart because the chart is something that has happened. That means you can control it, meaning you can study it and you can see exactly into the future and you can predict the price direction. That is either it will go up or down. Okay, so the basics of technical analysis boils down to what we call the candlestick chart. The candlestick chart is simply something like this that you see most of the times in like 2 or 3 minutes. Okay, so in essence, what I was trying to say before the class went flat was okay, was about the candlestick. Okay, so just give them 2 or 3 minutes, please, before we continue. So you can stop the recording, please, so that I don't know, even whether it is automatic or you can just. Okay, since we have the recording, I think it's better we continue. Okay, so I'll be sharing my screen with you guys so that we can proceed from our last class. Okay, so welcome back to the second session. Okay, so as I was saying, the candlestick chart is one of the most versatile and also up-to-date chart that we use to analyze the market. Before then, we have the bar chart, we have the line chart, and we have other charts that are being used to represent information. But the candlestick chart gives us more information because it gives us the open price, the high and the lowest price, and then the closing price. Okay, so the open and the close are the first and the last recorded price for the given time frame. For example, if you are using 1 day time frame, so the opening price is the price, maybe let's say, for example, at exactly 12:01 a.m. in the morning, da sassafe karfe 12 dare da safen shi, first transaction da aka fara yi shine open price ɗinka. Okay, and then the last transaction da aka yi before a rufe ranar, that is karfe 11 da minti 59 da second 59, that last transaction, that's the closing price. And then within the time frame, the price can swing up or high. It can go up or high. So these are your high and low. Saboda ba lalle bane price da aka bude da price da aka rufe ya zama sune na ƙasa da kuma sune na sama. Wani lokaci zaka shiga kasuwa za a fara sayar da abu, let's say misali farkon kasuwa, tunda dan kasuwa yana kallon akwai sa'a, or for example there are a lot of availability of that stock in the market, so he will place the price around, let's say for example 10 naira per that item. So maybe in the afternoon when the commodity is, let's say for example, a little bit scarce, so the price will go up to, let's say like for example 15 naira. Okay, and then maybe in the evening before he closes, the price went down to, let's say like for example 7 naira. And then at the last moment, maybe someone just come and then buys the last commodity, maybe the last part of that item at 11 naira. Okay, so pictorially, sorry, let me move my distance. So pictorially, if you can represent this information, it should be something like this. Okay, so we have something like this. Okay, so this is the open here, and then this is the close. This one is at the left, and this one is at the right. This is how to do it. And then we have this Sinke that you are seeing, this week, we call them week, like this, week, plural weeks. So this week, or shadows, so this one is the low, that is the lowest price, and this one is the highest price. So we are not just doubling our money into the market. We know exactly what we are doing. This is the opening price. That is, we say the market started at 10 naira. Okay, the lowest price is 7 naira. And then the highest price is 15 naira. And then the closing price is 11 naira. So the candlestick chart gives us all this information: the opening price, the closing price, the highest price, and the lowest price of a time frame. In trading, we use time frames. So each candlestick that you see here, this one, or this red, or this red, or this green, or this red, or this green, all of them, if for example, we are using 1 day, so this one is telling us about 1 day, this one is telling us about 1 day, this one is, and so on and so forth. And if you are using 1 hour, so this candlestick is telling you about 1 hour, the last 1 hour, the last 1 hour, the last 1 hour, and all of them, they are giving you information about 1 hour interval. Okay, so that's why some of the time you hear us talking about time frame, because different people use different time frames for their analysis. For those people that are always online, they can use lower time frames, and for those people that are professionals, they use lower time frames. That's why someone will tell you that I entered the market within 5 minutes, I made a so amount of profit. And as a beginner, you say, okay, let me jump. and then you lose all your money and you start shouting, Bitcoin has scammed me. No, you have scammed yourself, because as a beginner, you need to work with 1 day time frame or 1 week time frame, because you don't have the knowledge to receive all the informations the market is giving you and then interpreting them and then deciding what next to do, because you are waiting for someone to give you that information. So you have to use higher time frames so that you can call him, you can talk over the phone, you can chat him up, and he can give you information. Within 24 hours, you will know what to do next. But when you go for 15 minutes and you call him on the phone and he's not answering, and the market is giving you information, 15 minutes, you don't respond, 15 minutes, you don't respond, and the market just went in the other way, and you don't know what to do next. So the information given to you or presented by the candlestick or the time frame determines the type of trader you are, or the type of decisions you make, and it will affect your market or your portfolio or your account directly. Okay, so this particular candlestick pattern has been in existence since 17th century, and then in the 20th century, around, is it 70s or so, or something like that, or 60s, it was introduced into the West, that is to America and so on and so forth, and then they started applying it. Before then, they were using line, that is like this, and some of them are using bar chart like this. I'm not talking about the bar chart that you know in the school, something like this, like this, like this. No, our bar chart is something like this, like the button that police used to hold. But this one, it has 2 directions. So this one is the open, this one is the close, this one is the high, and this one is the low. Okay. So another thing to talk about before we leave this slide is that sometimes you see a candlestick is green, sometimes the candlestick is red. Okay. So what we mean by a green candlestick is that within this particular time frame, people make profit, and this particular time frame, people make loss. So in other words, when the opening price is higher than the closing price, that is, let's say, for example, you bought it at 10 naira and it closes at 5 naira. So 10 minus 5 is equal to minus 5. It means you make loss because the price is below what you entered the market. So the candlestick will be red. And let's say, for example, you bought it at 5 naira and the price went all the way to 15 naira. Okay, so with that, you make a profit. So the candlestick will be green. So that's why we have green and red candlestick. Profit made, green. Profit loss, loss in the market within the time frame, the candlestick will be red. Okay, and also the market has 3 directions. We have the uptrend like this when the market is going up, and then we have the downtrend when the market is going down, and then sometimes we have consolidation, that is when the market is moving in sideways. So uptrend, downtrend like this, and then we have the side trend. Okay, so for uptrend, the market is green most of the times, is green, and the downtrend, the market is red. And for consolidation, you will see a mixture of red and green candlesticks. It means that the market is resting. You know the market now, sometimes you rest, Baraka Jeka Swaba, you'll not trade, and so on and so forth. So the market is resting. So not all the time the market will be active. When I mean resting, I don't mean nobody is buying or selling. No, the large percentage of the buyers or sellers are out of the market. They are just watching the market. They are just monitoring the price actions. Okay, so the next thing to talk about are the trend lines. Trend lines are actively used in doing technical analysis. And in fact, this is the lines that you are seeing in our chart. We call them trend lines. Okay, in our last slide, we said that the market is in 3 trends. It can either be uptrend or downtrend or side trends. Okay, so when the market is going up, you know, in a normal circumstances, a beginner trader thinks that the price of a commodity will just go up like this from 0 to 1 million. Like this. He'll just make his profit, cash out, go back home and enjoy himself. But in reality, the market moves like this. It go up, comes down, go up, comes down, go up, come down, go up, come down, go up. But if you look at the price, let's say the price is 5 naira here, maybe at this point the price is 11 naira here. So you make profit as the price is going up. So the price is not always up like this, up, but it is up like a step, like this, like this. Okay? So as the price is going up, you will notice that there are some points that the price will reach and then it will come down, it will reach, and then it come down, it reach, come down, reach, come down. Okay? So these points, we call them swings. S-W-I-N-G. Okay? So the ones that are at the top, we call them swing high. The ones that are at the bottom, that is below the line, we call them swing low. Just like in our candlestick, we have open, close, high, and low. Okay? So if you look at these lines, you can connect them like this, and then they will be in a single line, all of them. And then this one also, you can connect them, and then they will be in a single line. Just like this particular point here. Okay, look at it here, and then look at this one here. So when you join those that can be joined together using a straight line, we have what you call a trend line. Okay, so this trend line gives us the general direction of the market. It gives us the general direction of the market. There are rules and there are principles in drawing the trend line. Okay? Okay, so another thing to talk about in the technical aspect of market is the support and the resistance. The price goes in this direction, it comes back, goes, comes back, goes like this. And we say this one is the swing high, and this one is the swing low. Swing high, swing low. Okay, so this line that we join, the trend lines, they act like a resistance, meaning they are preventing the price from moving beyond this particular point. That's why when you join your trend line, the price always or most often respect these lines. If it comes, it will bounce back. If it comes, it bounce back. If it comes, it's bounce back like this, like this. Okay? So this line here at the top acts like a resistance, meaning it says here that resistance means a level where the price finds a ceiling. A resistance level is an area of significant supply where sellers step in and push the price downward. Meaning that as a price is going up, it will reach a certain level that it cannot break that particular price, because psychologically, people have started taking profit. For example, when Bitcoin was around $10,000, because there is a psychological level within the market that Bitcoin cannot break $10,000. So anytime it reaches 9,500, 9,700, the price will just come back to 700, 7,000 or 8,000 or 9,200 and so on. Because people keep selling when the price reach that particular level, because the level is a resistance. It is preventing the price from further going up. The same thing when Bitcoin was around 19,000, 18,000, 17,000. It goes, it comes back, it goes, it comes back. And the moment it breaks that particular barrier, so it just flew away. Okay, so the next thing, so this is the resistance. And then the next thing is the support. The support is just a level where the price finds a flow, where the price finds a solid support, where a solid point that it can hold it, a point that can hold the price of that particular aspect. So we call it a level of significant demand, because most of the times people enter around these particular places and people sell around these particular places. So this is just what the support and resistance is giving to you as a beginner, that usually buying takes place around support and selling takes place around resistance. So buyers step in here and sellers step in here. Sellers sell, sellers, and then buyers buy here. Okay, so pictorially, let us look at this support and resistance. So for this analysis, I will be using Tap Trader. The name of the software is Tap Trader. Okay, so I will pick any coin. Let's say, for example, I will pick, let's say I will pick data USDT. Okay, I will clear everything. I will clear everything. I will clear everything. I will clear everything so that the magic will happen just, okay? So I will clear everything. Okay, so this is the price. As you can see, if you look at it this way, for example, data. Okay, so if you look at it, you can see the direction of the market. This one, the market is going downward, and this one, the market is going upward. And maybe around this place, the market is consolidating. Around this place, the market is consolidating, and then it went up. So the market is usually is always having three trends, either upward like this, or downward, or side, or consolidation. Okay, and then the next thing we look at, as the market is going up, let's say, for example, in this instance here, the market goes up, it makes a rest, goes up, it makes another rest, and then we are assuming that it will continue going up. So this is our swing high, another swing high, and this is our swing low, and this is our swing low. So we can use our trend line, and then we can connect it like this, and then we can connect this one like this. So people will enter around this place, maybe they will sell around this place, and the price will go down. Then some people will enter around this place, and the price will go up, and then they will sell around this place, and so on and so forth. So this is how the trend line works. It is acting like support and resistance. Okay, so for the support and resistance, they are mostly areas whereby the price finds a support, like this place. If you pick this place, look at the price. The price is just within this particular region. So this one is a support. Okay, and let's say, for example, around this place where the price is right now, if you draw a straight line like this, so this place, we call it a resistance, because it is, look at it, the price went here, it came back, it came here, it came back, and then it was able to break it, came here, it's now acted like a support, because since the price is now coming from above, so this has now become a support. So in essence, a resistance line can become a support line if it is broken. It is broken at this particular point, and now it is tested here. So here it is acting like a resistance, and here, that is at this point, it is acting as a support to this price. But it is broken, and then look at it, it was tested here, it was tested here, and then now it is tested here, and the price is respecting. So the moment the price went above this, we may say that, okay, we are anticipating the price will go all the way to this particular all-time high. So the analysis is just studying what the market is giving you. You are just reacting to what the market is giving you. So this is exactly what support and resistance is. This place is holding the price from further going down, and this one is preventing the price from further going up, like this. So this one is support, and this one is resistance. I believe you get the concept. Okay, so back to our presentation. Okay, so talking about technical analysis, we also use indicators, meaning there are tools that we use to predict the market, that is from previous informations that we have. So the first, or one of the most common technical indicator we use is the RSI, that is Relative Strength Index. So what the software does is that it tells us whether an asset is cheap or an asset is expensive. So when an asset is cheap, we buy. When an asset is expensive, we sell and we book our profit. So the reading is calibrated from 0 to 100. So from 0 to 30, this is cheap. It is cheap. Okay? And from 70 to 100, the item is expensive. So this is what the tool tells us. So whenever the indicator is down below 30, we buy. And whenever it is above 70, we look for opportunities to sell that particular asset. But we don't just buy or sell just because it is below 30 or above 70. But it will just give us an idea or an insight about the market being saturated or not saturated. That is about the market being cheap or not cheap. That is expensive. And then we integrate or add other tools, and then we do our analysis, and then we buy or we sell. Okay? So this is how the RSI works. Still back to our tab trader and back to our this thing that is RSI. So I will click here, and then I will activate the relative strength index. Look at it. It's just a tool that you can activate. So I have activated it, and then I will click here to display it here. So this is what the RSI does. Okay. So look at it here. Look at the reading. This is the reading here. This is the reading here. Okay. These are the readings. As you can see, the 70 is the top line here, and the 30 is the top line here. So anything above or below is cheap or expensive. So this particular place here, at this place here, the indicator is telling us that this asset is expensive. This asset is expensive. We should book our profit and go. And look at it here. When you draw a straight line, the straight line corresponds with the highest point here. Okay, so the same thing here. When you look at this particular place here, it corresponds with the lowest point on the RSI. So this is how we trade using the RSI indicator. Okay, we just activate it, and then we use it to analyze the market. Okay, then the next one is the moving average. Okay, sorry, I think this one is a repetition. So the moving average is simply your normal average. That is the average we use. Sorry, this one is just, I just repeated this this thing. I just copy it here without actually changing this particular place here. So I will assume this one is just a repetition, sorry. So I will cancel it. This one is just a repetition. So a moving average is simply your normal average. That is, let's say 1 plus 2 plus 3, which is equal to 6, and then you divide it by 3, just the way you take average. But in this instance, since our data are being updated by the seconds, by the minute, by the hour, so the averages are moving. Meaning if I take last 20 days, and then after 2 days, I have to shift 2 days forward. So I will drop 2 days from behind. in na ɗauki kwanaki 20 daga yau, in bayan kwana biyu zan sake ɗaukan kwanaki 20, dole na ajiye biyu na ƙarshe ta can, na ɗauki biyu ta nan. So that's why the averages are moving. So we use the moving average to filter noises in the market. The market is full of noises. The price will go up, will go down, will go up, will go down. So there are a lot of noises. So the moving average is presented with a line. Look at it, look at the line. This is the line, look at the line, look at the line. Okay, look at the line, look at it. So it is moving like this. So this one, it gives us a filtered information of the market, that this is the direction of the market. This is the market, how it is moving. But look at this one, what is telling us, this, like this, like this. But this one is giving us a filtered information. Okay, and also under the moving averages, we can use higher time, we can use longer days. Let's say, for example, we can use let's say 10 days, that is 10 MA, and 10-day moving average. We can use 50, for example. Okay, so we can activate it on the chart, and when we activate, we have something like this. We call it a crossover. So what this crossover is telling us, that if it is something like this from bottom to top, it is telling us that this price will go up. And look at it, exactly what happened here. Look at it here. So from here, the market just went up. That is when there is a crossover. And then if, for example, this particular commodity or this line just crosses this red line, so it is telling us that this commodity will go down. And if you continue, the price will definitely go down. So this is exactly what the moving averages does. Okay, it filters the noise in the market. And when there is a crossover, it gives you additional information about the market, that, okay, the market is now in a bullish trend, meaning the market is now going up. That is, in this direction, it is going up. And in this one here, if there is a crossover from the top, the trend. So we have different type of moving averages. We have the simple moving average, and then we have the exponential moving average. So they are almost the same, but the way of picking data or information from the chart is what differentiates them. So some people prefer the exponential moving average, and some people prefer the simple moving average. Okay, so pictorially, the simple moving average, you can even find it here, if I'm not mistaken. Trade. Okay, just click here. Okay, then look at it, moving average, exponential moving average. So all of them are here. And look at this particular asset here, that, look at what happened here when it is crossed. Look at how the price went up all the way here. So if you just know this one here, you can just buy at this pace and maybe ride along, and look at what happened here at this particular place here. There is a crossover. So this one is a bullish crossover, while this one is a bearish crossover. Or this one is a golden cross. This one is a death cross. Death cross. Crossover or whatever. Crossover. Death crossover. Okay? So you buy here and then you sell here. So even with this information, you can make some profit. So in less than 30 days, you see, if you come from here to here, maybe you will be in good profit, like 50 or 70 or 80%. So that's why it is a sin as a beginner to start jumping using 15-minute time frame or 5-minute time frame or 1-minute time frame, because you will end up hurting your account. Okay, so the next tool, we call it the Bollinger Band. Bollinger Band, not Bollinger Band, Bollinger Bands. Okay, some people call it BB. You know, B without B. B is like a brain without, it's like a train without an engine. Okay, so the Bollinger Band is made up of actually 3 lines. The first line here, and the middle line, and then the lower band. Okay, so this is the upper band, this is the lower band, that is this one, lower band, and this one is the middle band. Okay, so what the Bollinger Band tells us is that, is the market quiet or is the market loud? Meaning, is the market full of activities or is the market less of activities? Is there a lot of people in the market or is there not a lot of people in the market? Okay, and one good thing about the Bollinger Band is that whenever the price hits the Bollinger top, that is the top band, the price comes down to the middle. Okay, and in some cases it will further come down to the bottom like this. So this one comes to the middle and then it came to the top again. So the same thing, after hitting the top, it comes down. So it keeps bouncing, meaning it keeps bouncing from the top. Once it hits the top, okay, so the next thing is that it will start going down towards the center. And when it reaches the bottom, that is the lower band, it will start going up till it settles around the center line here. So the same thing here, it comes down and settles around the center, and now it bounces back again, and then it touches the top, and so on and so forth. So this is exactly how the Bollinger Band works. So that bounce that is doing, some people are using it for their own analysis. So they use Bollinger Band alongside RSI. Since we say RSI is showing overbought and oversold, so they will pick this tool and this tool, and then they will plot it on their own chart. So when the price is around this place and the RSI, or let's say for example, the price is around this place and the RSI is showing, let's say maybe less than 30, meaning the item is very cheap. So they will buy at this particular place. And when the market reaches this place and the RSI is showing, let's say 70, meaning it is expensive, they will sell. So this one is an easy strategy that can help a beginner. And also we should use higher time frames like 1 day or 1 week when we are adopting this strategy. That is the strategy of using Bollinger Band alongside RSI. So we should use 1 day to 1 week. That is 1 day, 4 days, or 1 week. This time frame works best. Okay, so that being said, we now venture into types of trading, because any person you see on the, or anyone you see in the market is doing different type of trading. Okay, that's why the beginners always lose their money, because they don't know what type of traders are they. Are they scalping? Are they day trading? Or are they swing or positional trading? Okay, so the first one is the scalping. The scalping is usually within seconds to some minutes, let's say 1 minute, 2 minutes, and then they are out of the market. They are fast, they are swift, and these ones, they are professionals. Okay, so these ones, they use technical analysis to try and predict price movement, and there are a lot of things that they do. So they end up with profit like 2-3% or 1% or 0.89%, but because of their high amount of capital, they end up with good profit. Like maybe after they execute, maybe like let's say 10-20 trades, they end up with like 20-30-40% in a day. And this type of people, they have in-depth understanding of the market. This is the most important thing. They have in-depth understanding of the market, and also they use very fast internet connection, and then they use state-of-the-art exchanges. You can't go to exchanges like, let's say, Hotbit and say you want to execute scalping and so on and so forth, because maybe the softwares, the engines or the machines used to host the software is not that fast compared to maybe website like Bithumb, Binance, and so on and so forth. So all these things come into play before you can be a scalper. You have to understand the market, okay? And you have to choose the best platform. And then you have to know the technical aspect of the market. You have to analyze the market very swiftly. Okay, so we have 30 minutes, so I'll be stopping here, and then in our next class, we'll conclude this particular training, and then we'll go for a live demo so that you guys can see exactly how some of the things work, so that you can decide whether you need a mentorship or you are just good by yourself. Okay, so just click the link again and then join us in the next 2 to 3 minutes. So thank you very much, and thank you for the audience.
I missed the first part, sir. I just joined. Thank you.
Okay, no problem. The recordings are available and the link will be shared on my timeline on the group, so you will not miss everything.
Okay. Okay. I will wait and get it later. I will join. Thank you.
So let's give those that are not still there maybe 2 or 3 minutes before we continue. Okay, so in the last class, we were trying to elaborate on the types of trading that we have over there, okay? And we were talking about the scalping. We said that scalping, in Hausa, we call it aska. There is that local shaving stick that you use, that when you shave your hair, your head, it will appear so bald. Okay, so scalping is more or less like this. You'll just time and then you just cut and go. So that's more or less like what scalpers do. They will just study the market, study everything, and then when they look for one kind time bomb, they will just place their entry, make maybe 0.5%, 0.7%, 1%, 1.2, 1.5%, and then they will close their position. Okay, so what makes or what gives them the edge is that they have in-depth understanding of the market. Let's say, for example, during news, especially in crypto, most of the times you'll see that kind of expulsion. Let's say, for example, you are able to see a Binance announcement maybe within the first 1 to 20 seconds. Believe me, if you are fast enough, you can make more than $200, $300, or $500 with that announcement that you see. For example, let's say Binance is now supporting, let's say, let me just give just one example, let's say Pulse. And then you are able to go and buy, let's say, like $1,000 worth of Pulse. And believe me, you will make like maybe times 2 or times 3. Okay, that within just that short period of time. Before, if you acted ahead of the people, you can make that particular profit. Or maybe Coinbase is listing a certain coin. So if you buy it within that announcement time, you can make 100, 150, 200% of your profit. So this is what scalpers usually do. Okay, they take advantage of the market. Okay, so I think we should continue. So I will be sharing my screen with you. Okay, so this is the first type of trading, that is the scalping. And then we have the day traders. Okay, so the day trading is exactly what you see in all the movies, that is in the Wall Street. You go to the office, you enter your trade from 9 a.m. in the morning to 3 p.m. You close, you go back home to your family, and so on and so forth. So this is what the traders do, okay? So they enter the market within the same day and they close it within the same day. There is a difference with scalping. Scalping, you enter within some seconds or some minutes and then you close it. So in a day, you can scalp like 10, 20, 50, 100 times. Okay, so the traders, maybe they hold their position for minutes to hours, but they close it within that particular day. Okay, so normally they try to maximize, maybe they enter futures, they do spot. okay? And then they do margin and stuff like this so that they can maximize their returns. Okay, so it is very profitable and also suitable for experienced traders. So I believe most of the beginners are jumping into this particular wagon, thinking that just because Mr. A or my mentor is day trading, let me just day trade also. No, you need to go for the higher time frames. That is the last aspect of it, which is swing trading. Okay, so in that particular aspect of trading, we go with higher time frames. 1 week, 1 day, 1 month, and then we analyze the market and see how the market works. And then from there, we just enter the market. So most of the time, swing traders are investors. They invest for 6 months, 1 year, 2 years, and so on and so forth. Okay. And you can be a swing trader, but you can trade within a month or 2 months and things like that. So ideally, a beginner should use the swing trading aspect. And in that aspect, we value or we prioritize value over price. In day trading, we prioritize price over value. So we just trade a coin because of the setup. But in swing trading, we trade a coin because of its value, because we see a value in it that some people do not see. Example, what happened with polka dot. A lot of people saw the potential of dot because it is contending with Ethereum. And believe me, Polkadot is going to make a lot of people rich within some time frame. Okay, maybe let's say like 2-3 months or so, because the fundamentals and the technicals are good. Okay, so with these 3 types of trading, that is the scalping, the day trading, the swing or positional trading, you will know which one of them fits your own style as a beginner. You know, you cannot scalp because you don't know the technical aspect. You cannot day trade because you don't have the full knowledge of the market. But swing or positional trading, this is what you should do. Because one ideology that is killing the beginner is that he thought that the profit he made, that is the amount of profit he made, is directly proportional to his effort. So when he wasted, let's say 1 month, and he makes just say like $10 out of maybe $100, he will be angry with himself. Like, out of $100, I just made $10. But a professional trader is counting the number of successful trades that he execute. Let's say out of 10 trades, he was able to win 7, or he was able to win 5. So he's counting the number of trades that he was successful, not the amount of money he makes. But when you base your result on the amount you make, so you will become frustrated at the beginning, and mark you, your account is still a baby. So maybe the amount you have is just $10, $20, and stuff like that. So your 10%, 5%, and so on and so forth is just $1, $0.5, and so on and so forth. Okay, so being successful is better than the number of profits you make. So along the line, as time goes on, you can make that money that you wish to make. Okay, so for the live analysis, I will just try to show you the different time frames we have and also how it affects the market. So I will minimize, and then I will pick either Binance or TapTrader. I will choose TapTrader. Okay, I will go with, let's say, DOT. Okay, so this is one of the analysis that I did on DOT, as you can see. Okay, so by now I believe you understand what this one means. This one is a support, and this one here is a resistance. So it was broken at this particular point. Sorry. So it was broken at this particular point here. Okay, and my profit is this particular zone here because I measure this. This is how to take the profit. You measure from the green to the other green, and then you project it here. So where it stops, this is where my TP profit is. And look at when it comes here, there are some element of resistance here because people are booking profit. Okay. So next thing again, we had some movement here from here to here. And then if you project it also, that is from this to this, you measure this particular distance, that is from resistance to the support, and then you extend it, it should be somewhere around this place. Okay, so there is no magic. We are not gambling with our money, but rather we are studying what the chart is telling us. So I can delete everything here, or maybe you just long press, delete, long press, delete. That's why I say you need to practice, because it is in practicing that you will gain more of the knowledge. Okay, so this is how it looks. So let's say, for example, this is where the time frame is. So, or maybe let me use Binance. So for Binance, let's say we are still using our LTC. This is where your time frame is. Just come over to this more. So you have many time frames here. We have 1 minute, 5 minutes, 30 minutes, 1 hour, 2 hours, 6 hours, 12 hours, 3 days, 1 week, 1 month. So if, for example, you picked, let's say, for example, this time frame, it means each candlestick is giving you exactly what happened in the last 1 hour, exactly what happened in the last 1 hour, exactly what happened in the last 1 hour. And all these candlesticks that you are seeing, each one of them is giving you different information. What this one is telling you is different from what this one is telling you. This one is telling you that the bulls or the buyers are in control of the market, while this one is telling you that the sellers try to push the price downward, or should I say the buyers try to push the price upward up to this level, but the buyers step in and push the price downward. And if you join 2 candlesticks with one another, you'll still get different information. So if you join 3 candlesticks, you get different information, and so on and so forth. So the same thing, let's say, for example, you pick 1 minute, for example. If you pick 1 minute, this one is telling you what happened in the last 1 minute, last 1 minute, last 1 minute, last 1 minute, and so on and so forth. So let us pick them and see how the market changes. So look at this market now. If you look at it here, from here to here is just an uptrend like this. The market is just going up from here up to this particular place, okay? That is using 1 day. Let's narrow it down to, let's say, 1 minute. Look at 1 minute. Look at what it's telling us in 1 minute. Look at what it's telling us in 1 minute. Okay, so 5 minutes. Look at what we are getting in 5 minutes. It is telling us that the market is going downward. So that's why if you are not professional, if you don't have good understanding of the market, you end up losing your money because there are a lot of noises in the market. Let's say, for example, as a professional trader, I could just enter around this place here. So, and then make profit all the way to this place here, and then I can opt out of the market. Okay, and maybe I have $1,000. So maybe I make 2%. So 2% of 1,000 is $20. So I will enter another trade, and so on and so forth. Okay, so this is how scalpers look at the market. So for day trader, we go with the 15 minutes. Okay, so you see in the 15 minutes, the chart is a little bit different. And then for, that is using 15 minutes, that is for day traders, you can use 15 minutes, 15 minutes, 15 minutes, 1 hour, and then the 5 minutes to do your analysis. With this, you will get a good information of the market. And then for scalpers, they can use the 5 minutes, the 15 minutes to do their own analysis, and the 10 minutes or the 1 minute to do their own analysis. For institutional traders or positional traders, they can use the 12-hour or the 1 day, the 4 day, sorry, the 1 day, the 4 day, and then the 1 week to do their own analysis. So they can do their own analysis like this. That's why some people will analyze Bitcoin from 2016. So look at it here. Look at it for 1 month. So 1 month, 1 month, 1 month, 1 month. Okay. So this one is a price rejection. Here is a price rejection at this particular point. A price rejection here. The price will go down. The same thing, look at it, the same style here, and the price went down. Okay. So there are a lot of things that you need to put into consideration before trading. This is just maybe 2 over 100 of it that you just study now. So that's why we have to have a kind of long-term frame, that is 2 weeks, 3 weeks, 1 month, so that you can get the ideas and everything in between. Okay, so last and final, that is the practical aspect, how to place a trade on Binance, how to buy and sell crypto with local currency, and setting your charts on Binance. Okay, so this one is very straightforward. Someone is sharing his background with us. Okay, so as we stated earlier, we said that this is the interface of Binance. As you can see, this is the front page. We have 4 options at the lower side of the screen, that is here. We have the home, where it contains some direct links to important aspect of the other application. And then we have the market. As we stated in our earlier chart, we say that the markets are in pairs like this, like this, like this. So in the market, we have different pairs. We have BTC pairs, we have USDT pairs, we have Ethereum pairs, we have BNB pairs. So each one of them is being represented by a different market. So look at it. BNB, BTC, alt, altcoin. Any coin that is not Bitcoin, we call it altcoin. So all these are altcoin. All these are altcoin. All these, you can call them altcoin. And some people are calling them shitcoin. So shitcoin or altcoin, anyone you call is the same. Okay. And then we have the next tab, which is the trades tab. This is where we execute our buy and our sell. So we have the buy and then we have the sell option here. Look at it, buy and sell. And then we can pick the type of order we want to do, whether it is limit order, whether it is market order, or whether we want to go out of the market, that is the stop limit. So if, for example, I want to execute a limit order, so I will enter the price I want to buy the asset in. Let's say, for example, I want to buy it at 135. Maybe I did my analysis and I noticed there is a support, because we say a support is a point where there is buying opportunity, buyers jump in. So I noticed that the support is 135. So I will say, okay, if the price reaches 135, I want to buy 10 LTC. So it will do the calculation and then it will give me. The lowest you can buy in Binance is 10.01. That's the lowest you can buy dollars. Your order should be more than 10.01. So if you put 10, it will tell you it is still insufficient. So just add 10.01 and then your order will be executed. So anything above $10.01, your order will be executed. So for this one, it is $1,350. And then we have 25, 50, and 100. What this one means is that if you want to buy a coin using some percentage of your portfolio, let's say your portfolio is 1,000 naira, and then you want to buy 25%. So you are spending 250 naira. And when you choose 50, it means you are using half of your wallet, which is 500 naira. And when you use 75%, you are buying 750 naira. And when you use 100%, it means you are using your whole money to buy it. Okay. So these ones, they make it so that it will be easier for you to execute your trade. And also over here, when you place your order, for example, like this, and if the order is a limit, your order will be placed here. It means that the order has been recorded in the book, but it has not yet been executed. So you'll find it here, LTC, USDT, and then you'll see the price that you wrote, that is 135, and then the quantity 10, and then the total amount 150. And then you see a percentage like a 0. That is, it has been filled maybe to this, it has been filled to this, and when it is 100%, you'll see it in your own wallet here. So this is where your wallet is. Your wallet is where all your coins are, and you'll find everything there. That is, whether you bought BNB, whether BTC, whether RIF, whether ADA, whether LTC, whether Ripple or anything, you'll just click here and all your coins will be there. Okay, so this is basically what happened under the trade. And there is one thing here that you can just click and it will take you directly to where we do the analysis. That is this place here. Okay, so once you click this candlestick pattern or icon, it will take you to where we do the analysis. Despite the fact that this place is not, or should I say Binance is not meant for analysis, but at least you can grasp one or two things here and maybe the direction of the market and stuff like this. Okay, so by the upper side of the screen, it gives you the percentage change within the last 24 hours, and it will give you the pair, that is the USDT. This is the amount in USDT, and this is it in Naira. Okay, this is the highest it has reached within the last 24 hours, and this is the lowest it has reached within the last 24 hours. And this is the total volume in USDT, and this is the total volume in LTC, that is in the native coin of this particular pair. Okay, so over here, we have, this one gives you the type of chart. Okay, so basically, let us explore it. We have like two here. Okay, so they are using either line chart. Sorry. Okay, so they're using either line chart or the candlestick. So once you click the time frame, it will just bring out the candlestick patterns. Okay, but if you prefer to use this particular guy here, you can still use it. So most of the times I use this particular line when I'm trying to get the support and the resistance so that I can see them pictorially like this. So I will use line chart. You see it here? I can see how the market is. But for analysis, I would prefer the candlestick. I usually pick the 1 day for my own analysis. Okay, so with this, for example, we can see swing high, swing low, swing high, swing low, swing high, swing low, swing high. Okay, so when I join this one, I have my resistance, mini resistance. And when I join this one, I have my support here. Okay, so the support can be vertical and it can be horizontal. So horizontal like this. For example, this place here is horizontal. So the region here is support or maybe resistance. If it is going from here, it hit, it cannot pass, it came back, it gathered momentum, it couldn't pass, so it was able to pass it here. At this point and this point, this line origin is acting like a resistance. But after it came back all the way here, it is now acting like a support. So a resistance line can be a support and a support line can be a resistance. One, it is broken. It is broken here. It broke it here and now it is holding it here. So it's now acting like a support. Okay. So the next thing are the indicators. As we stated, we have the Bollinger Band, and I believe you know how it works. Okay, look at it. When the price touched this particular place here, it came down here. This one here, it came down here. This one here, it came back to the center. This one tried to come back to the center, and so on and so forth. Okay. And then we have the RSI. So if you are trying to use the RSI method, we say that first thing is that you need to ensure that the price is at the lower band. Look at it here. And the RSI is less than 30. Look at it here. Okay, and then you can enter. So if you enter here, you wait when the candlestick is at the top, and also the Bollinger is more than 70. So you exit at this particular place here. So you sell here, and then you buy here. Okay, so if there are any other opportunity, like for example, at this one here you enter when this one is here, or you wait till it comes down to the lower band, and this one is less than 30, then you enter. Once it reach the top band, and this one is more than 70, and you can execute your sell order. So this is one of the most easiest strategy as a beginner you can apply. And remember, use 1 day time frame or higher. That is 1 day, 4 day, 1 week, and so on and so forth. Okay, and we have other indicators that the simple moving average, we say that once it crosses, like in this case here, it is a buy signal, and once the cross, that is when the cross is from the top, we call it a golden cross. And when the cross is from up, that is going downward, we call it death cross. Okay, so some people prefer exponential moving average, while some people prefer the simple moving average. Okay, so we have the volume. Sometimes people use the volume. Okay, how people actually use the volume is very simple. We call it divergence. Divergence, that is the price. This is the price and this is the volume. They have to go in the same direction. Meaning if the price is going like this, the volume should also go like this. It will increase. But in a situation whereby, let's say, for example, the price is going like this and the volume is going in this direction. Look at it. So we call it divergence. So it is telling us, what this volume is telling us is that despite the price is going up, despite the price is going up, but we are losing volume. Meaning it may be that maybe some of the investors are cashing out slowly. Okay? So we use divergence to predict the direction of the market. The same thing with this MACD. You can also use MACD instead of volume to analyze the market. So if, for example, look at how the MACD is obeying the divergence rule. Look at it. From here to here, the price is up and the MACD is also up. And from here to here, the price is down and the MACD is down. But in a situation whereby, let's say, the price is going up like this and then MACD is going down, the MACD is giving you information that sooner this price will start dropping. So the moment you notice this, you can just sell and then book your profit and just wait for the market to start the correction. Okay, so this is exactly what this tool is giving us. RSI and MACD, some people use them interchangeably. So you can use them. If you prefer the RSI, it has one line. The MACD is having two lines, but also it signifies the same thing. Okay, you can use it. Okay, so this one is the full screen option. If you want to do more analysis, like you want to analyze the market much better, so you can opt in for the full screen. It gives you more space to analyze the market. This is where you can click the full screen. Okay, and then we have the futures trading, which is additional or a different type of market that you can use to trade. It is profitable, and at the same time, there are some risks associated with it. So in essence, this is exactly what we do in Binance when it comes to analysis and trading. For the buying aspect of it, that is converting or buying your first Bitcoin, all you need to do, if your platform is something like this, you can just come over here and click deposit Naira like this, just straightforward, and click deposit Naira. And after clicking deposit Naira, you just wait for the page to load. Okay, so the recommended option is the bank transfer. You are charged 150. The minimum is 150, and the maximum amount you can deposit in a go or at a go is 4 million. So let's say, for example, I want to deposit 5,000. So 150 will be deducted out of it, and then I will get 4,850. Okay, so if I want to get exactly that amount, so I will add 150, and then it will be removed as fee. And then I will click continue. Okay, so once I click continue, it will give me all the informations. That is, I will pay this amount to 13597238180. That is this account. And the name of the account is Rubis Bank. So those banks that are very solid and so on and so forth. Okay. So I usually use them if the banks, or if the bank I'm using is not accepting, or is not, has not integrated this particular bank. So I will send money, and after that I will click the bank, and then I will try to pick that particular bank, because sometimes they are using Providus, and then sometimes they are using Rubis. So each one you use, you will find it on Kuda Bank. So from there you place the account, you just copy it here like this, long press, you copy, you come back here, you just paste it here like this, and then you enter the amount. Let's say, for example, 5150. Okay, what is this for? Personal. Never, ever, ever put Bitcoin, or you may risk losing your account. So your account balance is too low for this transaction. Okay, let's say, for example, 5,000. But you need to put the exact amount as the amount you inserted on that platform, so that you will. So this is it. So you are about to send money to an account that is not safe. Binance only is not safe beneficiary. So I'll press cancel, since the amount I want to send should be 5,150. Okay. If, for example, I made this transfer, I will just click I have made this transfer. So automatically, once I come back here, that is when I come back to my Binance account, you can click the cancel here. Just come back to your wallet here, and you can see your money under the support, or that is the spot wallet here. So you'll see it here under this particular place here, that is under the spot wallet. So just click overview. That's the general wallets. We have one spot, cross margin, isolated margin, this futures, P2P, and everything. So the total is what you get here. Sorry. The total of your portfolio is what you see here. That is, here is the total amount in your account. While this one are the sub accounts. So this one maybe is 1 million, this one is 100,000, this one is 150, this one is this one is that, this one is this, and so on and so forth. So this is exactly how we buy. And for those of you that your page is different from mine, just come to deposit. When you click deposit, click fiat instead of crypto. Click fiat, and then scroll down to where you see Naira, or you can search here NGN, Nigerian Naira. Click it, and then it will take you to the same place as the first one. Deposit, deposit, change to fiat, scroll down, NGN, and then you insert the amount. You insert the amount, and then you can buy your first crypto. Okay. And if you want to buy anything, just use the search button at the top here. I prefer this one. I will just search whatever I want to search. Let's say BTC NGN. So I'm buying BTC with my Naira that I just deposited. So I will just click the buy button here at the bottom, and then I will insert the amount. I will clear this place here, and then let's say, for example, sorry, let me say I'm just buying with 100% of my wallet. So I will click any of the price. Okay, so any of the price here, as you can see, any of the price here, I'm clicking. That's why it is showing some highlight, like white highlight. Or if you prefer to just buy directly as the market price, because your amount cannot change the market. So I will just buy at the market price for Bitcoin, because my 10,000, 20,000 Naira cannot change the market. Okay, so I'll just buy at that particular price. So I will click 100%, meaning buy Bitcoin with all the money in my account. So it will convert your Naira to BTC. Simple. And that's all. Okay. And then there is another option here for those of you that want to sell your coin. That is the P2P. Just under the wallet, you can find it here also. You can find it either here or you can find it here. So anywhere you want, you can just find it. Or you can use the transfer option. Okay. So the transfer option gives you the ability to move your coin within your sub wallet. That is either here, 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 here. That is from your spot wallet. You can move your money to any of the wallets, to any of the sub wallets. That is, you can move your money from spot wallet to P2P wallet if you want to sell. Or you can move your spot money to margin account, and then you can do your trading and so on and so forth. Deposit allows you to put money into your account, and withdrawal allows you to send money out of your account, that is out of your wallet. Okay, so it's very simple and straightforward. There are videos on that on YouTube. So when you come to P2P, it gives you the option to sell your coin. As you can see, we have different markets. You just come over, you click sell, and then you can pick any of the markets or any of the coin that you have that you want to sell. If it is BTC, click BTC. If it is BUSD, if it is BTC, if it is BNB, if it is USDT, you can just sell them and then you just cash out your coin. So it is very easy and it is very simple. Okay, so I think I'll be stopping here for the benefit of the 3 sessions that we promised to have. So I will not pass 3 sessions. So if there are questions, I would love to attend. We have 4 minutes, so make your questions brief and straight to the point. So thank you very much, and thank you once again for attending this free lecture. I look forward to seeing you in my premium class, which is starting on the 30th of January 2021. It is very elaborative. I'm making a lot of presentations, that is slides, so that everything will be in clear context to you. So thank you very much, and I look forward to seeing your beautiful faces in my premium class.
Okay, thank you so much, Oga Mahmoud.
Yes.